All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. And today we're going to spend a little bit of time on fundamentals, right? So let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. And as we are, what is this, Thursday? If you can hear me loud and clear, drop me a one in the chat. Let me know you're all ready to go and learn something tonight. All right, I see all the ones coming in. Appreciate it. Thank you for the early participation. So let's first break out and take a look at the news that came through today. So I close this out now. We'll go over and we'll look at the Eurozone, right? It was expected 25 basis points, came through with the 25 basis points as expected. Then you had, of course, the monetary policy statement, and you had the ECB press conference that came out at 8:45. This is a really good article here that I'm going to put in the chat. Second. Put this in the chat for everybody to read. Lagarde pre-announces another ECB rate hike for July, right? So they're going to keep it coming. Okay, so not 50 basis points, things like that, but another 25 basis points coming in July. That's what the market was trying to look out for. It says 1 month before the anniversary of what's become the European Central Bank's most aggressive tightening cycle on record. The ECB is continuing its fight against inflation and hiked this policy rate by 25 basis points. The deposit rate is now at 3.5%. A year ago, it stood at negative 0.5%. Look at how far we've come. The ECB also made official what it had already announced in May meeting. The reinvestments of bond purchases made under the asset purchasing program will stop next month. So there's tightening. All right, tightening continued. And then just right here, the ECB had not even, right? It's a quote from Lagarde. The ECB had not even thought about a potential pause in this hiking cycle. So even though we got the hawkish tone coming from Chairman Powell yesterday, the fact remains that they held rates. You've got the Eurozone. We know that euro dollar, most heavily traded currency pair, but you've got a rate hike that came again from the ECB. So you got a little bit of monetary policy divergence there. And if we go and we take a look at the Euro USD trade that we've been tracking and participating in, you can see that it is moving big time, right, to the upside. So we've got a very nice swing here. Close this down and see if we can zoom out. And put the spin back on here. Okay, here we can see, right? So this did, right, like we thought, form a lower high, right? I mean, a higher low. So here was a low here, higher low, continued off that 106 level, and we are moving long. Okay, so if we come down to the 1, we could definitely see it. And I continue to lose for some reason, but we'll run the fibs. Guess back for a second. So there we go. Okay, so there's that long coming off those levels. Ryan was spot on when he said, quit playing with my phone, because with that update, it's messing everything up. So throw those levels back in, but here's the move, right, off the long. So we are now off that level up over 300 pips, right? So that's going to continue to push long, okay? So that's the power of having a fundamental bias. All right, everybody, am I clear on that? Everybody understand that price action move? You've got the divergence with the ECB and the Federal Reserve. This is what happens, right? Strong move bullish to the upside. Is what we have, right? So if you come in, you take a look at the DXY, you can see, right? Just the total opposite, right? Just the inverse, moving down. The DXY is moving back down, coming back into that 12,722 level or whatnot. Okay, so that's what we have. So we got that long play playing out on the Euro USD. It's a beautiful move, and you know we got the rest of the euros moving bullish as well. We also had core retail sales, right? Came through for the United States, right on forecast. Empire State Manufacturing came in above target. Retail sales surprised for the United States. 0.2% was the forecast, came in at 0.3. Unemployment claims missed, came in at 262, right? And projected 246. All right, so tomorrow, well, not tomorrow, but tonight, it's always tentative with the Bank of Japan. We've got the monetary policy statement and the bank rate, right? So it's expected that they're going to hold. All right, negative 0.11%. So they're looking like they're going to hold again. But we'll see if there's any change in the Reddit. We know those yen crosses are getting ran on still. So we'll see what's going to happen there if anything new comes out of the Bank of Japan whenever they decide to put the information out there. Then tomorrow we got the University of Michigan Consumer Sentiment. So that'll be an interesting read. Tomorrow projected 60.1. So let's see what happens. But lots of good movement today in the market. Overall, any questions on the fundamentals?
Hey, Benny, how's it going?
Hey, what's going on? Doing pretty good. How are you?
Good. I'm doing well. With these numbers on the side, where it has like the negative number, does that mean minus that percentage, or is that like the negative number on the number line?
The negative number on the number line, however they like the metrics that they're using and how they track, right? Okay. So this is like here it is. That's just a negative 0.2%, right? Coming into retail sales. So that's projected negative in a negative way on retail sales. So they expected retail sales to go down, right, for the United States, but you see it came in at 0.3.
Mm-hmm. So they were expecting it to go down 2.2% or go down to a negative
0.2%.
Okay, thank you.
Like you see here is 4% previous.
Okay.
Yep. Great question.
Okay.
Yeah, cool. Yep, they're just subtracted. Absolutely. So you can see here, right? It was 262 previous on the unemployment claims. They projected 246. It came in higher. So more people than expected filed for unemployment.
Okay, yeah, gotcha. Okay, thank you.
Yeah, you're welcome. Any other questions? This is powerful stuff, everybody. It's powerful stuff. All right, so we're going to talk about, because on this morning session, right, we had a question in regards to commodity currencies and things like that. So I thought, hey, well, it'd be good for us to go back and start to review some of this stuff, right? Anybody think that's a good idea, right? This whole commodity currencies thing and how it affects the market and which currencies are commodity currencies. Anybody want to talk about that tonight? Randy, yes. Yes. All right. So let's talk about that. Okay. So we'll start tonight. We'll roll into, because you got your metals and everything, but we'll talk about commodity currency in general, and then we'll go into oil, right? So that's all we'll probably have time for. So let me pull up, let me put together today. Let me see if my bookmark is still active. Hold on a second. Yeah, I think, yep. All right. Let's see this. Okay, so let's talk about, can everybody see my screen? Oh, did it switch over? Are we good?
Yes.
Yeah. Yes. All right, so we're all ready to go. So we hear all of this stuff, right? Inflation, interest rates, production costs, seasonal demand, seasonality, you know, all types of stuff. Supply, demand, government policies, tariffs, the whole nine, right? It's all over the place, right? But it affects everything that we do, right? Our own personal lives, and then also as professional traders. So it's important that we start to try to get a grip on this, because we take more of a global macro approach to trading the Forex market, right? So we take a real sky high, top down approach to this thing, and we combine fundamentals and technicals, because it's the fundamentals that drive the market. And the way we do our technical analysis, we like to use our technical analysis not as the be all to end all, but to help us to, once we kind of gain that fundamental bias, the technical analysis helps us find the entry points, right? So if I'm selling the high prices, if I'm buying the low prices, okay? So that's how we combine the two together, more of a global macro approach. So if we talk about, right, we ask the question, what are commodity currencies? Okay, very simple. Commodity currencies are currencies that are linked to the value of a commodity, such as gold or oil. And these currencies are often used to hedge against inflation and other economic risks. Okay, a protection against, a hedge against, right? So that's simple definition. That's what it is. So we get the question all the time, hey, what are commodity currencies? That's it right there. That's a very, very simple definition that you can go. All right. So the currencies that are linked to the value of a commodity, such as gold or oil. All right. So the economic implications of commodity exchange rates are far-reaching and can have a significant impact on major currencies. Okay, it's very, 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 very important that we pay attention to that, and we know what our commodity currencies are. There's actually more commodity currencies, like a few more than what we actually trade, but we tend to just stick with the majors. So let's talk about it. Over time, right? Commodity prices and exchange rates over time. Okay, kind of like a timeline of what's been going on. So in 1970, and we can really spend a whole hour just on what happened with the dollar decoupling from gold and why it happened, right? But the US dollar decoupled from gold, allowing for floating exchange rates, right? And that's what we see right now as traders. So if you jump forward to 1973, Bretton Woods system is abandoned, leading to a period of high inflation and currency volatility. Okay, so that was 1973 and 1980. Commodity prices experienced a boom due to an increased demand. I have a question.
It's just so wet. You're just so happy.
So in the 1980s, commodity prices experienced a boom due to increased demand from emerging markets. Okay, so we've had in the 1980s new emerging markets, right? You've got rising middle classes in certain parts of the world, increased demand. Okay, 1990s commodity prices experienced a decline due to oversupply and weak demand. Okay, so the ebbs and flows, right? Those waves. And then you take a look at the 2000s, commodity prices experienced a resurgence due to increased demand from emerging markets. And then we move into the 2010s, commodity prices experience a decline due to oversupply and weak demand. And then as we came into the 20s, right, we saw what? A pandemic, supply chain shocks, commodity prices went through the roof, right? So I actually need to update my chart on this, right, to include that now, because that's what we're going through now, right? Those of you who have been trading with us for a while, we remember catching that oil at that low price, and it seemed like it was just going to go up forever, right? Due to the supply chain shock, pandemic issues with the pandemic, war that broke out. So think about that in our lifetime, what happened? You had a once in a 100-year pandemic, supply chain issues, and you had a war all at the same time, right? I think it's amazing as humans how we can maintain and navigate through just about anything as long as we do it together, right? So that's just a little bit of a timeline in regards to commodity prices and exchange rates over time, okay, and how things have continued to evolve, and they will continue to evolve, right? So just going into your major commodity currencies. So commodity currencies are currencies of countries that export commodities. Okay. So commodity currencies are often affected by the price of those commodities, as the value of the currency is tied to the export commodities. Okay. So major commodity currencies include the Canadian dollar, the Australian dollar, and the New Zealand dollar. Okay. Those are the majors that we trade, but you also have like the Russian ruble that's tied back to oil, the Norwegian krone, right? It's tied to oil, but these are the three major commodity currencies that we deal with. Yep, Clarence, I'll make sure I get it to everybody. You're talking about to this presentation, to the PowerPoint. So,
Yes.
okay, cool. These three currencies are heavily influenced by the price of commodities such as oil, gold, and silver. All right. Are we clear on that? Everybody drop me a 1. If we're clear so far. All right, awesome. So the impact of commodity currencies on major currencies, the value of major currencies such as the US dollar and the euro can be affected by the value of commodity currencies due to their influence on global markets. Okay. All right, so understanding commodity currencies and their impact on major currencies is essential for making informed decisions in global markets. Right? That's not only just for us as traders, but for major companies who deal internationally. All of this stuff is very, very important. Okay, so let's take a look at examples of commodity currencies. All right. So first we look at the Australian dollar. Okay. It's tied to the price of commodities such as iron ore, coal, and gold. Okay. Iron ore. Somebody tell me, right, why iron ore is so important. JC, steel, exactly. Construction, energy, manufacturing. Okay. Australia is a major exporter of these commodities, and their prices impact the value of the Australian dollar. Okay. So this is why, right? Who's Australia's largest trading partner?
China.
China, correct. And we all know that globally, China has been expanding, right? It is now the second largest economy in the world. Okay, that's China. So with China being their largest trading partner, if China does well, right? If their economy is doing well, and and their demand increases, that can help the Australian dollar, right? Because then there becomes a demand for those commodities. All right. So the Canadian dollar correlated with commodities like crude oil, natural gas, and metals. Okay. And metals. Some of those metals are like gold. Okay. So the United States, it's been a while since I looked at it, but the majority at one point, it was like 75%, right, of the oil was coming into the United States from Canada, right? At one point, I have to get an update on it. It was like Canada, Brazil, and Mexico. But Canada's significant production and export of these commodities affect the value of the Canadian dollar. Okay. And then we have the New Zealand dollar, which is influenced by agricultural products like dairy, meat, and wool. Okay. New Zealand's agricultural exports play a crucial role in determining the value of the New Zealand dollar, right? China is a large trade partner to China as well. So New Zealand and China, huge partnership. So if China's economy is doing well, you've got a rising middle class, people can afford more things, right? The demand for dairy goes up, the demand for meat goes up, okay? That's why when you see these commodity currencies doing well, doing stock market rallies and things like that, that's why, right? You see it all tied together. So those are the three majors that we primarily trade in regards to commodity currencies. Can everybody hear me?
Yes.
Yes.
Is there a lot of cross chatter in the audio?
I can hear you.
No, you're good.
Okay. Okay. Thank you. Okay. Okay. So Clarence, maybe that's maybe you got to check that out on your end. All right. Hopefully we can get that worked out for you. Okay. All right. So tonight we're going to talk about, let's talk about crude oil. Okay. The impact of crude oil on major currencies. All right. We're going to start with this. And then what we'll do is we'll just systematically work our way through different commodities. Okay. So I have here is all about the energy. Crude oil is one of the most important commodities in the global economy. Fluctuations in crude oil prices have a significant impact on major currencies. So understanding the relationship between crude oil and currencies is crucial for Forex traders and investors. All right, very important. Okay, so it goes beyond just, I know it's important to us at the pump, but it goes far beyond that, right? So crude oil as a commodity, crude oil is a vital energy resource used in various industries such as transportation, manufacturing, and agriculture. It is traded on international markets with prices influenced by supply and demand dynamics, geopolitical events, and market sentiment, right? How is everybody feeling, right? So we remember that back in the early days of this current cycle, it's like, man, like we're technically not in a recession, but how does everybody feel, right? Sometimes sentiment plays a huge role in that, okay? Because if I feel like things are tightening, regardless of what people say and what pundits say on TV, if I feel like things are tightening, then I may not be willing to spend as much money or travel or do different things, okay? So let's talk about the impact of rising oil prices first. Rising oil prices can affect major currencies, particularly those of oil importing countries, okay? So that's one thing. The next thing is increased import costs. So oil importing countries experience higher costs for energy and production inputs, impacting trade balances. All right, trade balances can put a downward pressure on the currencies of these countries. Okay, so oil price, when you have rising oil price, it puts a lot of pressure on the importing country. It puts a lot of pressure on their currency with those prices going up. Okay, and we see what happened and what really brought on oil prices going up. People spending more money for commodities and other things, and now we're dealing with inflation, right? So that was part of the reason. So the impact of falling oil prices can impact major currencies, especially those of oil exporting countries. So it's in reverse, right? So reduce export revenue. So oil exporting countries may face decreased revenue, leading to lower government budgets and potential fiscal deficits, right? So if you depend on oil to generate revenue, that's your main commodity. If those oil prices are going down, you can see, right? So you can lead to lower government budgets and potential fiscal deficits, right? The ebbs and flows of the market. This can weaken the currencies of these countries, right? So you have it from the importing side and you have it from the exporting side, okay? So what governments and institutions try to do is just to keep somewhat of a balance, right? Keep somewhat of a balance, right? You don't want it to be so extreme in one direction or the other because it leads to problems, all right? So that's why I always say is we're in this together, whether we like it or not. It's a global economy, all right? So isolationism, it's not gonna work, right? I had to get this done together. So let's talk about the relationship between crude oil and the United States. So the United States has an inverse relationship with crude oil prices. When oil prices rise, the US dollar tends to weaken as it's a safe haven currency and investors shift toward riskier assets. We gotta think about what's going on right now. You've got the stock market rallying, okay? The dollar tends to play a little bit of a safe haven role. Right now, investors are moving into riskier assets, right? So you see commodity currencies running long. You see the US dollar tailing off, moving to the downside, trying to find support technically. All right. Everybody get that? Drop me a one in the chat. Is that making sense? Okay. Okay. Higher oil prices can increase inflationary pressures. Makes sense, right? Potentially leading to tighter monetary policy, which can weaken the dollar. A lot of things going on right now. Impact of the CAD on the CAD. Canada is a major oil exporter, and crude oil prices significantly impact the Canadian dollar. So let's talk about it with rising oil prices. Rising oil prices strengthens the Canadian dollar due to increased export revenues and improved trade balance. It boosts economic growth and investor sentiment towards the CAD. Okay. So oftentimes as oil goes, so does the CAD. All right. So let's talk about the impact on other currencies. Okay. Crude oil prices can impact other countries, although to a lesser extent. Currencies of oil importing countries may weaken as energy costs rise, impacting inflation and trade balances. Currencies of oil exporting countries may strengthen or weaken depending on the economic diversification and fiscal policies. Okay. So in conclusion, crude oil prices may play a significant role in shaping the values of major currencies. Rising oil prices weaken currencies of oil importing countries while strengthening those of oil exporting countries. Forex traders and investors closely monitor crude oil price movements to identify potential currency trading opportunities and manage risk. And that's oil at the surface level. So we're working on some things to go even deeper. But I know we're only on here for an hour. So hopefully, right, that helps a lot of people to gain a better understanding of commodity currencies. All right, didn't want to get too deep, but I hope that helps. Any questions?
Hi, Benny.
Hey,
Yeah, my question is, if Canada is exporting crude oil, why is America buying crude oil from Russia? And when Russia was banned, why did the prices of crude oil affect America so much? Because like in terms of transportation, it's much cheaper to export crude oil from Canada. Why would they go all the way to Russia?
because they might have been getting a better price. And then depending on the type of oil, right? So when you talk about oil coming from the oil sands and things like that, so it might have been a price difference, right? In regards to your currency exchange. Because remember when the war broke out, the ruble got crushed, right? You get what I'm saying there?
Yeah.
Right. So you're looking at your currency exchange rates.
Okay.
You know what I mean? So maybe that's why. But technically, right, that wasn't supposed to be coming from Russia because it was going through I forget where it was going through. Ryan followed this closely, but it really was coming from Russia, right? Because they probably
Italy,
were
I
getting
think.
yeah, Italy, right? It was going through the refinery in Italy, correct? Right, which
Okay.
technically made it, I guess, not from, it was being refined in Italy and then shipped over, right? So my guess is because of what the price was at the time. So I have to look deeper into that.
Okay. Thank you so much.
Yeah, great question. I have to go back and look at some of those articles. Ryan was giving updates on that constantly when that war broke out. On that. Any other questions? No, we got it. All right. All right. So those are the commodity currencies. So let's take a look. All right. Let's take a look at some what's going on. All right. So let's look at the CAD. Take a look at the CAD yen. Okay. So we've gone, it's running, right? Look at it running long, right? Moving into riskier assets, doing well, straight up. Look, broke that weekly level, it's moving. All right, we didn't get a rejection off that level. We know we had come into, it was a beautiful play to the 382. It's gone beyond that now. All right, so we're at the 61.8 here on the CAD and the daily, right in that resistance zone. Okay, so you can see it's making a very nice run. Okay. No trend line break, nothing, just kept going straight up. Okay. So the CAD's doing really well right now. If we come in and we take a look at, let's roll down and take a look at the dollar CAD and how it's performing. So we can see, right, weak dollar, strong CAD, how we're pushing through that support. It's trying to break that level. Okay, been moving down. Okay, the dollar CAD's been moving down. The CAD is the counter currency in that pair. Okay, down. All right, and take a look at this NZD CAD. NZD, another commodity currency. Okay, so we know we've been tracking this one. NZD is gaining strength, which is another commodity currency, right? Moving to the long side. Okay, so let me look at something quick. This has been a major play. It continues to move long, which is a good thing because that's how we plan it. Set up. Let me roll back to the high price and work it back down. There we go. To set it back up again. Okay. So we're still headed towards that 382. So that's moving nicely. All right. Now, so that's your NZD CAD, right? So we spotted the U-turn zone and it's moving long. All right, so let's check it out and see what we have. Didn't give us any news on that on the New Zealand dollar, but check out the CAD. Appreciate it against the dollar in 4 months. Hawkins Bank of Canada in his latest meeting, the central bank surprise markets. We already know that decision, tightening cycle to 2 consecutive holds. Positive. Economists expect the central bank to continue raising rates in July, right? So maybe another rate coming, but you got the same thing coming out of New Zealand. So right now, you've got a correction, right? So if this New Zealand is eventually going to move back short against the CAD, we want a high price. And then at that point, we'll see what's going on and see if it's ready to get short. All right, but you can see how it's moving, lower lows and lower highs. So we're in a down retracement zone. That's why we're playing at 80-20. So off that support, right, we are 135 at its highest point. So about 180 pips or so. So we still have about a little over 100 pips to that 382 target. So we'll see if it gets there. But so far, so good on the NZD CAD. Any questions on that pair? It's been a nice swing. It's taking its time, but it's moving in our direction. You're in at 81.21. Nice. That's nice. Keep letting it ride. Do the work for you. Let the market work for you. Good job. Good job. Let's take a look at this pound CAD, right? We know we've got a strong pound. We've got a strong CAD. Okay. Who's winning that battle? We broke that trend line. Look at that CAD. I mean, look at that pound moving up. Okay. Moving up. Stock market's rallying, pounds rallying right now. That's good. Right? More rate hikes to come. At least that's what's expected on the pound. We've got a nice ABCD wave playing out there. So we'll continue to monitor that, look for pullbacks and opportunities to get long. Look at that. It's moving in waves, everybody. Questions on the pound CAD? Oh. All right, let's look at this NZD USD and this continued move, right, to the upside. It's almost to that TP2 target. Looking good. Good trade pros. All right, almost there. 260. 260 off the low. There it is on the 4. That's a nice rally, right? Technicals and fundamentals. It's the daily level. Look at that. Look at that U-turn. Beautiful. Good work, everybody. Any questions on that NZD dollar? Okay. Let's look at this UJ. Check this out. Uh-oh. Is it finally gonna happen? Somebody tell me. Yes, no? Are we finally gonna get some relief? Looking like it. Looking like it. That one's been bouncing around forever. Anybody still holding this one? What a mess this has been. Got kicked out. Yeah, didn't quite get to that extension. So it's terrible. But hey, as long as I hit that extension, it's coming back down in the range now. See if that continues to play out. Anybody checking the data? Any news yet on this? Let me see. Probably still saying tentative. Yep. I don't need any crosses. Something's got to go down. Wait, it says, gotcha. All right. Well, my goodness. What a mess that pair has been. Let's take a look at crude oil and what it's doing. All right. just stalling. Right? It's just stalling. So that when you see that UCAD, that's mainly on dollar weakness. Plus you've got, the monetary policy of the Bank of Canada kind of hawkish right now, but they had 2 consecutive pauses though. So it depends on what you're really trading that category. Let's see, let's look at this dollar Swissy. What are we doing? Turning back over to the downside. All right. So ever since we've come off of that 38.2, the 317 pips, right? It hit that TP1 and it's moving back short right now. So it's a good move to the upside, but we couldn't get that TP2 on that. Dollar weakness. It's a beautiful trade though on the 80-20. That may just continue to decline. I get this one. See if this. Okay. All right. Let's look at this. Let's look at this Aussie dollar. Finish out these dollar crosses. Look at this. My goodness. Straight up. What a rally. What a rally. So we're looking for pullbacks at this point. See how I took out that A? All right. So here was your A on that down move, right? Price is moving down, making lower lows and lower highs. Now you got this full on reversal right here. Off this 4 hour. D extension hit to the upside. So we're looking for corrections and potential continuations. On the one, we got a new AB boundary. All right. So you all know the sweet spot. If we can get a pullback and a correction into that zone, and look to get long. And look to get long on this Aussie dollar now. All right. So we'll wait on that one. We'll wait on that one. Any questions on that Aussie dollar? What a move. Wow. Nope. All right. Let's go take a look at the
Gold.
year. You want to look at gold? All right. Let's take a look at gold.
Sorry, I didn't know.
Right. Having a hard time at that level. Okay. We've got, from this weekly perspective, okay, we've got potentially as resistance becoming future support. Let's see, we got dollar down. All right, you got an inverse correlation. We see if it can sustain itself, right? We zoom in on it. We're trapped. We're trapped. We need a breakout. All right, so a little bit rangy. See if he can make up his mind, but man, could make that U-turn on that 80-20. But let me zoom out because that's coming off the high. It's moving all over the place. Yep. So it's ranging. So I just want to keep my my levels on this. Hold on one second. There we go. So I'm pulling this off because it's sideways. Ooh, so I'll adjust this to this low. That's all. Now these are daily levels, so that's what I'm going to look for. If we get back above, what is this, 1983? We can see it continue to push long, all right? Below that 1924 level, continue to see shorts. You're welcome, Brandy. Thanks for being here. All right. So that's where we are on gold, right? That's a wait and see for me. Right? I want to see it break out of these levels. Any questions on that?
Yeah, Benny, if it should break above the 1983.73 level,
Mm-hmm.
you
Mm-hmm.
think we will see something like heads and shoulders?
Like up here?
Like
Where, yeah.
head would be here, this would be the shoulder, it's gonna create another shoulder, like the,
How about on the move up? Tell me where you seeing? Where you seeing it at?
well, I was thinking it would, if it should break up this level, the 1983, it would come up to create another shoulder here.
Oh, another shoulder. I get what you're saying. Okay. Okay. Potentially. I get what you're saying. But you see here, right? Where's your equal low, your equal neckline?
Okay. I was seeing wrong.
You see what I'm saying? No, I you know what I mean? I identify I see what you're looking at and how you can see that, right? But when we're looking at that head and shoulders, right? See what I mean? You wanna find that neckline, right? If you're staying truly disciplined, right, to that price action pattern, because you want that neckline to be broken, right? So either you want to play it off the right shoulder, because in essence, right, that's an ABCD wave. That's a pullback and a continuation aggressively off that right shoulder, or off of a break and a retest of the neckline if it holds.
Okay.
Like here. So you want to look for, right? Do I have, so for example, if it got priced to hold, okay, like this, we didn't get that, it broke below. So yep, you're starting to see it though. You're starting to see it, right? Not a bad observation at all. But I'm just gonna keep the charts clean on this one and just keep it right, straight support and resistance, because see how it broke down, but then it got bullish right back up above that 1938 level. So we're in this range. So it needs to make its mind up. So we're looking at breakouts, right, and a potential retest. And you might be able to, this is the 4 hour, so you might catch a retest of this zone if it wants to do that on your 1 hour, your 15-minute, right? Then a continuation. But then the same thing to the downside, right? If we want to break down and retest that range, move south. So something to think about. Something to think about. That one, just be patient, right? Don't want to get whipsawed. So we just wait on that. Any other questions on gold? No? Does anybody know what Bitcoin is doing right now? I almost forgot about it. What are we doing? Is it still doing the same dance? No. I don't know. Anybody trade Bitcoin? Anybody trade cryptos?
No.
Sure. Nope. Well, me either. You want to? All right. Nope.
Bitcoin 25.5.
You said 20, you said what? 25.5?
Yeah.
Yeah. I I think once they the technology is here to stay, the blockchain. A lot of these coins, I don't know. But I think it'll be a lot better once they regulate it. They've got to regulate it. I have a few coins I invest in. That's cool. Yeah. It's like the Wild West sometimes. We'll see. We'll see. But I've had that set up for a long time. All right. Look good for a minute to the downside, then it can't make his mind up. So we'll continue. We'll check it from time to time. Before we close out, any other pairs? I know we spent a lot of time tonight on that, talking about commodity currencies, but any other pairs we want to take a look at before we wrap it up? Then it has
Many,
standbys ended. Yeah. Go ahead.
Yeah, have you gone over AUD card?
I did not. Let's take a look at it.
Okay.
Oh, it's still rumbling, huh? Aussies definitely got the upper hand right now. What we thinking, Jeremy? It's up into the zone here. Those are some of the levels we were talking about. It got through it. Look, boy, that's amazing, right? We never got a daily 382. We never got the daily 382. I like to short it, to be quite honest. Like,
Yeah, because I was I think I was seeing like a reverse head and shoulder pattern on the daily. And
which one? From right here? From here?
yeah,
Or which way? Yeah, I see what you're looking at. If it holds that level and for it to come down, I mean, we're up around 98%. Like this is, hey, a couple times a year you have these major runs like this, these major rallies, but eventually that steam's gonna run out. So whether it runs out and we correct right into your head and shoulders pattern, like you're thinking, you're talking about right here, right?
yeah.
Yep.
And I
Expecting
think
that
on the
zone.
80-20 on the 4.
Mm-hmm. Like that. Okay. And I've been watching those levels because I know earlier, and pull this off real quick. I know it was pressing up into the cloud and those resistance levels. That's where I got my eye on it. I'm like, that's a lot. That's a lot that's gonna have to push through. But you can see, but I'm thinking, Jeremy, like if we do get that correction down, definitely potentially reverse head and shoulders. Look, we're getting bullish. We're getting that cloud to come in there on the daily. And you're on the 4, right? Go ahead. What were you telling me about the 4 hour?
Yeah, I think I saw 80-20 on the 4 on the sub fib. Yeah, so I don't know.
Yeah. So hey, if it runs past that, right, that 80-20 zone, just let it ride. It's coming into an extension, and this is major resistance. So this is gonna be interesting. So we're overbought on the daily, we're overbought on the 4, right? So maybe we got some relief coming, right, for a correction. But I'm interested in this. The Aussies, I'm a little perplexed by the Aussies. So much back and forth with it, right now. But I'm interested to see how this one plays out. Whether it's in the sense that I think no doubt we're gonna get a correction here soon, but what I'm wondering is how long will that move to the downside sustain itself, right? Is it just going to be a correction and then a continuation and we continue to see everything rally? Or is it going to tail off and make a C to D push from there? It's hard to tell right now. Hard to tell, but this is an interesting one. But it's within the framework, right? Of what we trade. It's a beautiful U-turn. So it seems to be working its way back right to that target. Just a matter of whether it wants to correct or not. We shall see. Shall see. Here it is on the 1, right? That's almost to an extension. That's close. So we got some relief in the zone. Right? Just couldn't sustain itself. Right? So that came out of that 80-20 zone. Almost 70 pips. Right? Buyers just took back over. Strong run. So it's probably gonna hit that D extension. And maybe that's when we'll start to see that reset, Jeremy. That exhaustion. Continue to wait, be patient. Anything else before we wrap it up tonight?
Thank you, Benny.
Oh, you're welcome. NZD Swiss. Okay, I'll take a look at it. You're welcome, Clarence. This one so we got the bounce right off the news. We were looking at this one last night. So we'll see if this is gonna maintain itself and create a higher low. But we got the push. But it's choppy as usual. It's choppy as usual. But this Euro GBP is kind of settling down, right? Maybe we're gonna get that continuation. That's what I would like to see. Come up off that level. All right, that's the fundamentals there. The ECB and the rate hike. We got the bounce. See if I can continue to gain some momentum. That could be a tough one, right? The pound's not weak, euro's not weak. Those can be tough to trade when you got two strong currencies or two extremely weak currencies. They could tend to range a little bit, but this one is always a choppy period. But I like the fact that it came into that major monthly low and started to react. So we'll see if that can continue to get long. All right, we'll take a look at this NZD Swissy and we will close things out. Listen, right? It's like, man, was it gonna go any lower? Right, so it's holding up right now. All right, so like we got opportunity for more bullish momentum. We continue to get the rally. What does the daily look like? It's fighting. Overbought though. I'll continue doing it, but it's just a matter of how much it wants to pull back. That's all I've got on that. Which that Joy? You holding that long, Joy?
Yep, I'm in at 54996.
559. Okay, that's good entry.
54996. And then
Yeah,
I
that's good.
got
That's-
my second one at 54985. So that's the one I was looking at.
Yeah, that's a good one. I think that's gonna continue to make some progress to the upside. It's gonna be slow. I mean, that's what it is. NZD Swiss. But I think, it came into some major lows and it's been trying to move up ever since then. So good job. Good job. Oftentimes, if you could catch a lot of these when they come into those major monthly, weekly lows or highs, like you get a reaction oftentimes. You know, you're dripping trades in. Can be that simple sometimes. But you gotta be patient and wait for it to come into those lows or those major highs, and then make you move. You know, whether it's having limits at those levels, or once you see it on a higher time frame, moving into those major supports or major resistance levels, going down to your 1 hour, whatever chart you want to enter on, and waiting for trend line break lows to form and trend line breaks. You know, it really could be that something. Yeah. All right, so that's all I got. Any questions about anything that we covered in regards to commodities? I hope that really helps people out. We're gonna continue to go into metals next, talking about gold and things like that. And we'll keep it moving, keep educating, keep helping people to become more knowledgeable about this market. Nothing else. You're welcome. All right, everybody. Well, we'll be here. Appreciate it, JC. 7 a.m. Eastern Standard Time on Saturday for the Forex Weekly Ritual, seeing what we can catch for the following week. Have a good night, everybody. Thanks for your time.
Good night, Benny.
Thank you, Benny.
You're welcome. You're welcome.